Hey guys, welcome to this video. It's going to be quite a long one today, and it's going to cover all US dollar pairs, their counterparties, as we close out the year. I thought this was going to be really good time to do this, especially in light of what you've seen recently. Don't forget, if you want to trade for income, or at least have an idea of how it's done by people like myself, you can get the free training underneath. It's right there. Don't forget to comment, like, share, and subscribe, or wherever you're watching this. It's fine. So, US dollar pairs, we're going to go over what we've seen, what's happening now, and a bit about what I really would expect in 2024, or at least how I'm aiming to trade dollar pairs in 2024. And my bias, my idea on how things are and where they're going with a technical and macroeconomic approach, or in other words, fundamental approach. The only key US data you've got this week is GDP on Thursday, December 21. And just before you go off for Christmas, some of you, of course, will be working. Happy holidays, whether you, if you celebrate Christmas. On the Friday, you've got core personal consumption expenditures price index, month for month, November, year on year, November. So a little bit of US news as we close out the week, and then little bits of UK news, for example, and things like that. Minor Eurozone news too. So we could see a shift in those. But let's start off with the story, the picture, because it's going to give us an idea of where we're going. And this is going to be really interesting because you can see literally on charts what has happened and the transition. So we're going to take it back as recent as COVID time. Okay, so you had COVID round this point. Okay, 2020 comes up. And now what happens after COVID is everyone starts to go, hang on a minute. We're going to have to pay for everything that occurred. And what you start to get, and this is the same across various pairs, and I will look at other pairs on this video, I will skip between them. What you start to get is this. Now, this process I'm highlighting is a process which you'll see very frequently. It shows you how markets naturally move, okay, in staircase fashion in many instances. And what's happening here is slowly people are shorting and shorting and shorting. And every chance where they get a pop up, okay, you'll find you've got people who are on the right side of the market and look for these kind of opportunities to short. And that's because within the fall, that is the highest point you've got and therefore the most short value. So this trajectory continues. Now, what I said about how you know sort of the picture of the market without even reading the news really is because for some reason, there's got to be a reason for it, the euro is losing value against the dollar. Now, as we had all these scares about recessions, the global economy, how awful it was going to be, okay, and as that went on ultimately till the end of 2022, more or less, you know, people invested in the dollar. They treated the dollar essentially, and you can read all about it in the news reports that were there. You can go and Google it, search it. They treat the dollar more or less as a means of a safe haven, if you like. So they rushed to the dollar, and what that did was it pulled it down and down and down and down. Now, I said many times after these extremely harsh falls, which you can see on things like your monthly, and all these resistance levels highlighted coming from the top when it started to look a bit bad, all of that just comes as the fear grows. But as I said many times within, ultimately that has to end. And what you commonly get in your retracement is a similar kind of pattern that reflects that market movement again. So instead of it being sort of stepping down, if you like, over time, it becomes one in which you find you start to rise up. Now, the difference between the fall and the rise is simply market sentiment. It is simply the idea that people are going from being fearful that everything's going wrong to hopeful that everything is going right. Because when you got to this point, it became the case that you had an extreme low. You haven't been at that place since, well, early 2000s, 20 plus years, 20 years or so. And the problem with that is that is an extremely low price, and you would expect the rebound to be fairly high. Now, it was, and that was absolutely the case, okay, because you came to a 0.618 fib, you can see that here, and that retracement showed you a lot. Now, we called it short here again, and you can see as you started to fall, that negative sentiment which we saw it joins the market again. And instead of people sort of buying the euro as they were like this, they then say, okay, well, actually, I think I'd prefer to sell it. And they do briefly. Now, what then happens is you get all these red candles, loads of them. Okay. And after things like this, just like you saw on that long-term fall, you tend to get significant rises. I mean, you can see how many candles that is there, and you can see it reflected in your stochastic oscillator, your RSI, or whatever sort of indicator you're using. So that big fall resulted in a long again, in line with price action to the left, and you get this up move again. Now, what is happening at this point is that people are doing exactly what they started to do over here and there and there. It is positive sentiment. It's that positive bias that makes people say, you know what, perhaps I'd rather buy the euro. So it's the complete opposite of what you've seen here. But whether it's a fall or a rise, or for whatever reason, it is purely a change in sentiment. Now, the reason why that's so interesting is because lots of people will always buy after the move up and lose their money, and they'll sell after the move down and often find they lose money because they just short before the price retraces on any amount. So it could have even been that move or that move. Okay, it could be very minimal. And the same to the upside. They might buy there and then they get crushed. So it's really key to understand that you can't specifically get along very well by doing that. The best thing you can do is trade for the impending change in sentiment. So I'll explain what I mean by that a lot more. You can see that the rise here has been caused by the Fed starting to say that they're looking at cutting rates, and they think they've got inflation under control. Okay, so what happens is if they cut rates, it is less attractive to invest your money in the bank to get interest because you're not going to get as much. So what people do is they invest their money in other currencies. Doesn't have to be the euro specifically because the ECB is making changes too. It could be the pound, the AUD, the New Zealand. And that's what drives up the price. Okay, people saying, I don't want to hold my dollars anymore. Now, like I said, for any reason, that is the case. Okay, the dollar was treated as a safe haven on this fall. Okay, and you can see that's why they fell. And now it's no longer that as a purpose, but that reason was kind of different to what it was now. Okay, so it was similar in some ways, but you can really read between the lines so much easier now because you know what the news is saying. You know what the sentiment is. It is the case that people don't want US dollars. So what's happening now is that change in sentiment is occurring. If you view it on the daily, you can see it's very tentative, drops back, and then as soon as you get the announcement from the Fed, it flies up and you drop. And then this most latest streak from the Fed is what brought you up massively. Okay, so the point you're at now is one in which you fell here and you fell there. So that's demonstrating to you it was a strong level of resistance and price didn't like it. Now, it can only be hit so many times. And preferentially for myself, I would rather aim above, especially given the sentiment we discussed, to the next area of price action. Or in other words, where you can see there's more contention. Okay, and what I mean by that is you've previously seen the price fall here. So it gives you an indication of where people really like it short and where the value lies. Given that the sentiment surrounds dumping of the US dollar, that is a reasonable price in which people might say, okay, well, I've had enough of my longs and I'm going to get rid of them. That's what they did here, and it caused the market to fall, and that's what they've done throughout. Now, you can see if you zoom out on your euro or many dollar pairs, which, like I said, we'll cover in a sec, you can see this sustained downtrend. Okay, now it doesn't have to be the case it's exact every time. Okay, and you can somewhat discredit previous areas, but you can see if you look at it from a trend perspective, there's still room to the upside. It's not the case that it will definitely have to get here before it falls, But if you shorted first where we just mentioned in line with this previous short zone and all these key moving averages and key price action to the left, you might consider DCAing here. So I would expect, and I wouldn't be shocked if this occurs, I wouldn't be shocked if the euro does get to this second point in the future into 2024. Given the sentiment around the dollar, especially, and because you only really have major resistance at this point up here, you can see there's many areas of contention, like I said, many areas rejection previously. So it falls very in line. Now markets, as you'll know if you follow me, naturally trend. Okay, that's the natural formation. If you don't believe me, zoom out. It's all there to be seen. It's oscillation after oscillation, trend within trend, over and over again on all time frames. So my bias is up here for that. If I wanted to buy this, and there was a bit of uncertainty with the dollar and the Fed, because you have, interestingly, today had comments from Fed's Goolsbee about preparing to change policy and their route. They think it's overdone, the reaction to their comments. They think it's largely overdone, especially in indexes. They say they're confused with the market reaction. So it's very tentative and a little bit messy. But I would say probably if that confusion continues and you do get down here, it's ideal for light longs in my opinion, because you, like I said, you've seen that happen many times before. You know it's an area of rejection, you know it's an area of contention, and therefore you may consider rebuying. Okay, so I would only really consider buying if you drop to that point, and I would only consider reshorting if you can come to this point and that point, and it falls with the overall downtrend long term. Okay, so ultimately, if this continues, you may see it lower. And you might find that you get in line with something like that, okay, down here. But that's all for the future. I'd prefer to focus on local areas, like I said, for now, because we can guess all we want. But if we trade with facts, we don't need to be right every time. So if I just swap onto the pound dollar as well, you can see the situation is actually very similar as to how I've drawn my eclipse symbols. Okay, if I then draw my downtrend, and like I said, it doesn't have to be the case you include every single bump or push up, but you can see again, it falls very well with this long-term downtrend. Now on the monthly, you can see you've gone from the financial crisis downwards, okay? And we're not as low as we could go or have been. We've been down here before, and we only returned actually lower than that at the extreme low, hence why I was mentioned it long. You can see that massive rejection, massive contention. I get, again, people pulling off their shorts and changing long. That's what you get the upside from. So you can see, again, I like it short here, and I prefer it short there. And it just comes with that long-term downtrend and also that long-term price action. If I extend this eclipse, you can see it's all there. And like I said, if it turns out it's more contentious, I think the Bank of England is a little bit more worried than the Federal Reserve, but generally they like to use the Fed as a status quo. A lot of economic zones do, unless they're wildly different, but a lot of people look to the US for an indication. And you get down here, I wouldn't mind taking it lightly long. Okay, and that would form what would then become, and the same for the euro, I probably should have mentioned, it would be a sideways market and it would be a stall. And that is fairly ubiquitous at times like now, because people they're not entirely sure how clear they should be. I know you can see my cat mug. I'm sure there's many of you watching who've got one as well. I didn't realise there was a cat on it before I started, but I'm not shameful. So anyhow, I wouldn't be shocked if your pound pips slightly higher first and you draw back. But overall, I'm looking for the long-term downtrend trajectory on that as well. If I flick onto something like your AUD, you can see again, I've drawn the long-term downtrend. You've got good area in line with your 100 MA. Okay, and I wouldn't be shocked either, really, if you get to this point soon for shorts. It does become the case that you go even higher. You could look towards this 200 MA. Remember, we're always using these moving averages as gauges for price. We want to know what is low on average, what is high on average. Okay, it's the same if you watch the weather. It's the same if you're looking at practically anything that needs to be measured. Okay, temperature, heights of people, demographics. There's always an average, isn't there? It's the same in markets. If you're above average, you should be short, generally, if you want to catch a larger fall and get market value. And you should be below average if you want to be buying at value as an investor to the upside. Now, the picture on the New Zealand dollar is the same. Okay, I wouldn't mind lightly shorting now, and if we can get closer to that higher MA, I wouldn't be shocked as well, and I may look to add. Okay, so your New Zealand and your order quite the same, somewhat similar to euro and pound, but they've got a little bit of breathing space. You can, of course, see your stock oscillator is very high. We're not using it as a be-all and end-all. Stock oscillator's high. Wow, let's sell everything. Got to be careful on that. But you can use it as an indication for what is a high price and what has market value. Okay, so I would prefer it short there. And potentially, if you get higher, you could consider up here in line with that 200 MA. Again, above average for that period of time. That's the point. So as a summary of US pairs overall, you've had that influx of sentiment in the market. You've got to the point where the Fed is being tentative. You can see Fed Goolsbee putting his comments out today. Okay, but you do have that underlying part where people are saying, oh, right, well, the interest rates aren't going to be as high in the US, so perhaps I shouldn't have my dollars in the bank. I should take them out. What that does is it increases the value of the other ones because people would prefer to have that currency. The currency markets, Forex, is completely ruled by the actions of a central bank, and to a large extent, that is the case for stock markets as well. Because, of course, if rates come down, people have more money, they spend more money, stock markets come up. Now, they've said today that is just overly priced in, and that's why I'm shorting the indexes for another time, that video. But you've just got to read between the lines. You've got to understand sentiment as a whole and how it changes. Because it's much harder to make money if you wait till it comes out and then try and buy too late, okay? Or you short too late as well before it comes out and pulls the market to the downside. You've got to be many steps ahead, and you've got to understand that ultimately sentiment will change on its own, as it always does. And of course, as I've shown you on all these charts I've looked at, there's no chart really here where that isn't the case. For whatever reason sentiment changes, the ultimate reality is that it does change, like you saw here and like you saw there. So that is a full rundown on all US pairs. Don't forget to trade small, trade lightly, and as always, get my free training underneath. Like, share, comment, share the video, and of course, you can join our Discord too. See you in the next one.